Hi, everyone. How's everyone doing? Hi, Glenn, Kevin. What's TAT, Kevin? TAT Day. Irina, good morning. How are you? So, Euro has recovered most of everything lost. So, I kind of looked at and went over most of the instruments that I trade to see what has recovered almost everything. Oh, turnaround Tuesday. Okay. I think we had turnaround Monday. Yes, it was yesterday, turnaround Tuesday. So Euro almost did it. NASDAQ has done it. S&P is not quite. All right. So as I scan the screen, I'm looking for things that recovered 100% from yesterday's sell-off, and NASDAQ pretty much has. S&Ps haven't. I think they will. Euro has, and Euro, I know it's coming off a little bit now, but I still think it wants to take out these highs up here. Dollar gave back almost everything, but it's still possible we could get an ABC. Although, I'm going to stand by my memory, as good as it is, that there will not be a major inflection point, a major top, or a major bottom during the next week and a half until after New Year's, because I believe that big money will engineer rallies for instruments they want to short and also engineer declines for things they want to accumulate into the new year. So this is a lot of, I know there's news with Brexit and there's news with what happened with finally getting a COVID relief bill, but it's my contention that this is really a lot of cross currents this time of year of book squaring and end of year tax selling, a lot of different reasons for what's going on this year. Of course, COVID, played the role. So something else that did not recover uh, most of its losses is energy. And we have Tracy here with us today. Shy Girl's going to be here. But I just drew this little circle up here so that you guys could take a picture of, what a 3 drive looks like so that you could trade them next year. Okay. And just a quick RSI, it's not just the form, it's also the momentum, right? So here was drive one last week, confirmed high. Drive two didn't make it. And then Sunday night, look at the glaring divergence on that after we started off higher and broke. So when you look at the crude, it hasn't really recovered as much as risk on has, which makes me think that this could still be a short candidate. You had about a $3 break. Why can't we trade 44, 43, 42? It would not upset the bull trend that's been in force for a while for us to pull back to some major support. Some of these moving averages on the daily come in right there around 42 and a half. I'm not looking for 36 anymore, but I do think that what happened yesterday is significant in crude. I still think we're going to see new highs in S&Ps. That we could still go to 13,000 in NASDAQ, and also gold didn't recover all of its losses from the smash. So this is something I'm not ready to short because this could be a 1, a 2, and a 3. So I don't know exactly what to do with the gold, but it hasn't recaptured either. Silver's really been the star, and it's showing it again today. So we'll see what happens with silver. In fact, when you look at this, we're actually making new lows on the gold silver ratio. Okay, that's a retest of the low. Here's your daily. We're almost there. So we're probably going to get a low. I wouldn't press this trade now down here of the gold silver ratio. I know people are looking, I remember days when it was normal for a gold silver ratio to trade at around 40. Uh-huh. Okay, and we'll see what happens here at new lows. If we could get some shorter term divergences. Right now, the RSI looks terrible. Look at this. So maybe one more flush, one more low. I don't think, I think if you don't give up on it, Tom, and you never know the difference between a top and the top until you look back in the rearview mirror. Okay. And so, I mean, if you're shorting things and it has become more two-sided, you have to admit that the market has, equities have two sides to the trade instead of just grinding up day after day after day. There've been some pretty significant breaks just yesterday as an example, and there have been 100 handle breaks in the S&Ps, and I know I've been there for some 300-400 point declines in NASDAQ, even though it hasn't topped. So it's all about your entries, your TFs, and it is possible. 1920, I kind of see that, Ingmar. So it all depends upon your style and your time frames that you could actually be trading against a trend and make money when it becomes a two-sided market in an uptrend. Does that make sense to you? I know, and there's been times I've tried it as well and have been stopped out. Okay, so Ingmar is looking for 1920 as a possibility, and that's what would happen if we had something like this. All right, here's one, here's two, and we end up taking out this high for three. 1920 was a big area. I don't know about we almost got there yesterday, in fact. So we'll see. The daily doesn't look as impressive in gold as it does in silver, right? We still have working on a breakout here that silver hasn't negated unless it would take out 2420. Whereas when you look at gold, there really is no breakout yet. Maybe above this high, it's going to start looking better. I mean, here's a conventional, and then I'm going to turn it over to Blake in case he wants to do some things to do to trade. But just conventionally, gold has not broken out like
Hey,
silver has.
take your time, Dale. I'm winding things down for the next, week
Weak.
or two. So
Okay.
yeah, but go ahead. Just take
All
your
right.
time. I'm here though.
Okay. And this is really also going to be the key to a lot of things. And now everyone's talking about the banks. The banks were very strong yesterday despite the COVID, and it's based upon this. Okay, so I know some people are thinking, Steve Volge, that rates are going to head down again, but they haven't done anything wrong on a daily basis, and we start breaking out through 1%, which it's failed from a couple of times. Why can't we go 130? Yeah, that was share buybacks, right? Okay, but it's also yields. If you notice, if you look at the bottom of the XLF, yields bottomed in August. Let's see, I think I have XLF up here. Here we go. So here's August, September. This move has mainly been about yields. Buybacks just started yesterday. Okay, Bill? So we've had a very nice move, a breakout, a gap, kind of a breakaway gap. And, when you think about 2020, what have been the two areas up until the end of the year, last month or so, that has not received much love throughout the year? Everyone hates banks, Steve Volge, and oils. Okay. So really, your stars, um, your stars have been banks and oils. So, there is some rotation going on. These stars haven't done that much. Microsoft has had a nice rally, but we're still not making new highs here. Apple still not making new highs here. Amazon, I think they look crappy. And I actually think that, excuse my language, the banks didn't. Yeah. Yeah, could be. Yeah. So I think that the cyclicals and the banks and consumer discretionary will be the leaders next year, and things like this, Amazon and Google and Facebook. I mean, Facebook has been under pressure. I mean, when's the last time you saw the market make new highs without FANGs or MAGAs? And especially Amazon has led the bull market for I don't know how many years, and I've been showing it since late September. Okay, it is. It's a big triangle. So, what we can do, we could break out either side. The point is, it's not making new highs with NASDAQ. All right, we're almost at new highs, and the high in Amazon is 35.52. So we're still 300 points away. So obviously, this rotation into reopening, cyclicals, um, consumer discretionary. Uh, let's look at it this way. I know that what's going on, that there's variants, and maybe we're going to lose another year to COVID, but I don't think so. I think that this summer, if a lot of people have vaccines, people are not much different than you and me after being in isolation, pretty much being afraid to, do things that people uh, are dying to go out and do something and have some feel like some part of normalcy is beginning. Yeah, I've heard that too. Well, then you know what? Then you're going to be looking at an 1800 S&P by the end of 2021. If that is the case, that the vaccine does not work, yeah, I think that's a possible. Yeah, but I'm thinking next year, Tom. Okay, I've rarely seen major tops and bottoms, like I said earlier, happen during these last 2 weeks of the year. So I was thinking 3780, 3800 in the S&P is still possible in the next couple of weeks. And here's your bull bear line that Blake described, right? Oh, okay. That is really, yeah. This year could be different. But I mean, back under 3600, there's a problem. But I was thinking that we still had a chance to, you know, trade above these highs. There are a lot of people that had like 3800 for a target, and there's some fib numbers that I've seen from the team up around 3780. So we're really not that far away, and we'll see what happens. I think it's going to happen in the new year. We've seen January swoons. I think it was 2019. The market was melting up, and then we had a real big sell off in January. And sometimes, what they say, so goes January. As January goes, so goes the rest of the year. And Steve is a big believer in turns at the beginning of a month, the beginning of a year. So I'm looking forward to getting these last couple weeks over with, and I do think that we will see something. I think we'll see a dollar bottom next year. I pointed out that November, just seasonally, this is not my opinion. Seasonally, December is one of the weakest months for the dollar, and January happens to be one of the strongest months for the dollar. So that's what I'm looking for going into next year. And that's about all I have to say. We have Shy Girl with us today, so we'll get an update on what she's thinking in the energy complex, what she's thinking in the euro, gold. So we'll get a look from Tracy to give us some things to consider going into this year-end time frame. So stick around for Shy Girl and Blake. I think
Good morning,
said
Dale.
every. Good morning.
Yes, a pretty quiet night overnight,
Yeah.
and just to make sure everybody knows, obviously we're going to be broadcasting tomorrow. Tomorrow is the day before Christmas Eve. Christmas Eve we won't broadcast, so Thursday we won't, and then obviously Friday as well. And I just wanted to make sure that everybody kind of knew that. We'll be back on Monday, after the Christmas holiday, just so everybody knows. But but other than that, things are just kind of getting a little quieter, winding down, getting ready for the holiday. So, like I said earlier, I'm really kind of steering clear of the market right now. I mean, there's going to have to be price is going to have to get to where I want it in order for me to participate today. Oh, sorry, I didn't mean to yawn on you, but Dale, I was listening to your talk there, and you'd mentioned that the dollar is this is the weakest month for the dollar index
Yeah.
seasonally, and then we get a bounce back in January typically, and that makes sense with this year as we go out at the near the all-time high. So as the equity markets continue to blast higher, what are you feeling here into this next year?
10 to 20% correction from new highs.
Yeah.
Yeah, I think it's going to happen. After talking to Harold and yesterday, it's going to take Biden about really 18 months to really, get his and look at all the empty holes in the U.S. government from that President Trump has left. He's hollowed out a lot of the agencies. So, God, I don't know why Joe even wanted the job, but it's going to take some time. It's the one heartening thing that I heard from Harold Malgrim yesterday is that he knows that Biden and McConnell have a relationship from the Senate, and he actually thinks they're going to be able to do deals together. So that'll be a change. We'll see what happens, but that was his view. I said, "Oh, you mean kind of like the days when Ronald Reagan and Tip O'Neill would battle on the floor of the House and the Senate, but would get together in the evening and have some brandy together." So that'd be a nice change. But I do think that up around I think Greg had a wave five up around 38, maybe it was 38.50, but maybe you pull back to 3,100, 3,000. And then I know a lot of guys that I respect that are looking for, the 4,000 handle anywhere from, 42 to 47 next year. But then you look at a guy like Brian Lefkowitz. I'm sure you're familiar with him, Blake. I
Yeah.
saw him on CNBC yesterday. And you know what his target is for 2021?
What's that?
3,800. I mean, we're almost there. And that's with a whole year to go. And he's not bearish a market, but what he's saying is the issues that comprise the major indexes will have some air taken out of them, while things like, that have been hurt, like cyclicals that don't have as much impact on the major averages, will outperform. So we're almost at his 2021 target. So
Well,
I
let's
don't think it's
imagine.
unreasonable to look for 10 to 20% correction
Yeah, and
from.
the question is, how high can we go before a correction? And I'm
Yeah.
still in the camp that we could move higher. And I was still
How
looking at
much?
61% extension that takes us above 4,000.
Oh,
On a
okay. Yeah.
blow off top, but just to keep in mind a 20% correction from up there brings us back down to 3,300. So when you think about like having corrections in the market, the question becomes, where does the correction start?
Yeah.
And half the time, by the time you're 10% into a correction, you're like, oh shoot, we're correcting now. You know what I mean? This
Mhm.
isn't just a pullback. This isn't just a retracement. So it's going to be interesting to watch equities and where they go from here. I'm anxious to see if we actually spike higher through following the Christmas holiday into New Year's and the first week or two of January. That's going to be interesting to me to see if we can make our way up there. So yeah, I guess
Okay.
we will see how it
That's what
goes.
makes the market.
Yeah, exactly.
Yeah.
So anyway, I'm looking at I want to make sure that we focus on all these currencies and what we've got going on. The euro, I mean I warned everybody, and let me take a step back, and I don't want to pat myself on the back because it's just I don't like doing that, but I do want to say that on the week ahead video, I said, be very careful of one-way markets. Yesterday, Dale, was a one-way market. I'm going to take the Aussie for an example. This is European trade. This is an hourly chart, right? This is European trade Sunday, Monday.
Right.
This is yesterday to yesterday afternoon. I mean, that just take the Aussie. This is the Aussie dollar, guys.
Yeah,
A
huge
currency
move.
that trades at 75 cents. We went from 74.60 to 76 cents. So that's a 140 pip bounce in like 9 hours straight up. I mean, it didn't it barely flinched. It barely even moved like 3 pips in the other direction before grinding higher again. But that is flow related and end of year. I mean, that's really what it boils down to. It's the end of the year. There's flow in the market, and it's going to push the market one way or the other. And trying to stand in front of it is very difficult. And if you happen to be there for the turn, consider yourself lucky. And I know I said this during the week ahead video, so I'm warning you guys that if you are out there fading moves, because that's what traders do, right, Dale?
Yeah.
Traders
We're
tend to fade a move. They see a move and they're like, okay, I'm going to go opposite direction. We pulled back enough, or it's gone too
sell
far.
rallies, buy breaks.
Yeah, but and so in this type of market, we can get serious one-way direction. So you have to be a little careful trying to fade those. So anyway, like I said, I didn't want to pat myself on the back. I just wanted to show you a great example of what happens during this time of year that I did talk about over this weekend. And that can happen over the next couple of days or next week or two. So just be careful. All right, let's get some of these key levels out of the way, because we do have, believe it or not, we have some data coming out. We have final GDP coming out momentarily. I don't think it's going to be a market mover, but that doesn't mean that it won't be. So the 161% extension that held us last week is at 122.70 roughly. I'm gonna say that's roughly. So 122.70 for the euro dollar. We're still in a very bullish trend. And for right now, intraday support is going to have to be 122. And then below that, and this is interesting. Notice this red trend line that held yesterday. This is from the spike lows, and we've had this drawn here every day for the last, 2 weeks, right?
Yeah.
Because we had this red line drawn because we had the wedge. We had the red line drawn below that because I remember mentioning, just in case we break through the bottom end of this wedge, we'd respect this red trend line. Yesterday, we actually did that to it, like to the pip. I haven't adjusted this trend line
You
at
know,
all.
Paulie showed a similar line in S&Ps that went right there at 3,600 before it recovered. He had a
Yeah, and
similar uptrend line. A lot of things. You know what it tells me, Blake? We know something. That if the market takes out the lows made yesterday in a majority of markets, there's a problem.
yeah, and I'd agree with that. And I think that now we have to, that trend line is going to come in around 122, 121.70. So I'm going to write down 121.70 and then 122, because 122 is this low from here, basically. So that's what we have to respect. And while we're above it, there's zero reason to be bearish. But if we break that, we could see a more substantial pullback. The cable. So there was a Hail Mary that Johnson and since Amanda's kind of been out, I'm not super familiar with what the Hail Mary was, because I actually had to run an errand for my wife yesterday. So and it kind of happened when I was gone for a half an hour, and the cable spiked up and we almost filled the gap. But I have to say this, while we're below 33.50, that spike right there, all these spikes up here minus the big one that took us above 136, 135.50 and 132, you can see the range is tightening a little bit. Should I even really say that? It's probably going to start looking something like this. I don't want to deal with the cable. So 132, 135.50, and then we're going to stay in range. It was bullish last week, but considering we couldn't hold above 135.50, that makes me a little nervous. Aussie's still bullish. Look at where the Aussie spiked to yesterday. Again, I haven't changed these lines, guys. These are the same lines that you guys have been seeing for the last couple of weeks. Remember, we had this channel. Dale, we had an overthrow, right?
Yeah.
And then we came back down, respected the bottom end of this channel and also this previous resistance. So this red box that you see here, this is what I was showing everybody from the daily roundup. I'm like, okay, because we were right here. So, we already been bouncing yesterday. And I'm like, if we get back down here, this is going to be your support level, because that's the previous breakout point that comes in at 74 cents. And then we have 74.50. So right now, 74.61. And now I'm going to actually write down higher than that, because if we do drop, we should find support around the 75-cent level. So, and guess what? It's still bullish. And look at how quickly we recovered yesterday.
Yeah.
I mean, that's massive. So resistance, previous support, that should act as current resistance. We overshot it yesterday. And by the way, if you remember yesterday's analysis, I think, and I'm going to go and check right now because I haven't checked yet. I'm pretty sure we wrote down resistance yesterday as being
76.
75.75 or 75.80. $75.75. That's from yesterday. Okay.
Yeah.
So, we overshot it a little bit to 76 cents because we had written it as the 618. So what I'm going to say is, 76 cents is probably good resistance right now.
We have data in around 20 seconds. Blake, good morning.
Hey, good morning, Stelios. Thank you very much. Let's go over to the dollar index. Guys, if you're Forex Analytics subscribers, you guys will get this data flash. I'm putting it back over here, and let's see how fast it is compared to Bloomberg. This is Bloomberg. Oh, Data should be GDP 33.1%, 33.1%. Watch this data here, and whoa, it's not out yet. Okay.
Yep, it's late.
It is late.
They had other things to do.
Apparently. They're wrapping Christmas gifts. Oh, that's what I
Yeah.
need to do. You know,
Trillions and trillions of Christmas trees.
my
Gifts.
kids are older now. You know, my kids are teens, so you know, wrapping Christmas gifts is not so much a priority to me as it was when my kids were your kids' age. You know, it's the kids love having those Christmas gifts under the tree. Now my kids don't care. They're like, "Give me money."
Give me money and peace and quiet. That's all they need, huh?
I really like money. I don't care about the gifts. Just give me money.
Okay, so we may not be getting data today. Let's see.
Apparently not. I don't know what's going on here. I mean, Bloomberg hasn't released it. I don't see it anywhere.
They're elusive. You have to guess.
What's that? Yeah, I know. Oh wait,
There you go, 33.4.
33.4. Hasn't pulled up. Oh, there, it pulled up in Data Flash now. Usually they're pretty comparable.
Yeah, they come out together, but sometimes when there's like a big delay or something like that.
Yeah. Well, it looks like the market's not moving on that data. So there's that.
No big surprise, to be honest.
Yeah. Okay. So I'm going to get back to the analysis, guys. I'll wrap this up relatively quickly because the market's been quiet overnight, and I expect that. I actually expect it to be the same. One of the things one of the guys in my office asked yesterday, just as we were logging out of our meeting, because our office we had Zoom as well. He goes, you know, he was like, "Hey, do you have any ideas, or anybody have any ideas regarding currencies?" And I said, you know, when we see these big sweeping moves, like we saw yesterday, like this is the Aussie, and this is an intraday of the Aussie. I'm like, typically when we get these, you know, big sweeping moves in either direction, that's the start of a consolidation. So what I was basically telling him here is, you know, we're probably going to start consolidating ahead of the Christmas holiday. Is probably what's going to happen. You know, after those big boom, and then everybody got killed on both sides, and they're like, okay, you know, no one's willing to stick their neck out ahead of a holiday. It's usually what happens. What I've seen over the years in my experience. So the reason why this is important is because I don't think we should be looking or on the lookout for, not for the next couple of days, maybe next week when we'll be back broadcasting on the 28th. You know, we'll take Thursday, Friday off, obviously for the holiday. We'll be back on the 28th. Then you might start to see some moves again. But I think over the next couple of days, you know, we might consolidate because of yesterday's move. So just keep that in mind. Okay. So with the Kiwi, look where we spiked to yesterday. And by the way, I didn't think we'd get all the way down there. I didn't think we'd get all the way down to 70 cents. But we did. And it was key. And that was before we wrote that down yesterday, right? We dropped all the way to 70 cents, bounced aggressively. That was obviously the place to buy it. And that, you know, 71.15 was resistance. And I think now, well, no, was that after the fact or before the fact? I can't remember. But we've known that 70 cents is big. But now it looks like 70.50 or 70.40 is support, and resistance is going to be 71.15. So I'm going to write this 70 cents. Obviously, that's big. 70.40 and then 71.15.
The variant.
Was that
The variant.
the variant?
Whenever I sneeze, yeah. Now I'll say, "Oh, God bless you, the variant."
All right. Dollar
No, it's
Canadian.
not funny.
This dollar Canadian, massive scream higher, and we spiked right into previous support, current resistance, overshot it. I think,
You said
actually
29, a little over 29 would offer resistance before it got there.
you know what? I actually think that any move back to 29.50 is going to find sellers. So I think this is where we're going to find resistance now, right there. And it might be 79 or 129 and a quarter this time. I don't know if we're going to overshoot this time around, but 129.50. That'll be key. I think we'll be lucky if we get up there. But let me state this. It's bearish, but barely. And the reason why I'm going to say that is because we are threatening to once we, or if we break through this support here at 129.50 on a sustained basis, I will go back to range, like on the dollar Mexican peso now. Okay. Because at this point we've basically, broke down, couldn't hold it, and then we're back above the breakdown point. So, but you guys know I've been very skeptical about being short the dollar Canadian for the last couple of weeks. If you've been listening here for the last couple of weeks, you know that. Okay, so support, and look at what held yesterday. Okay, I'm assuming we wrote 128 and a quarter, 128.35. Whoops, that was from yesterday. So. And that was a 50% retracement. So 128, I'm going to write down 128.25 today, a little bit lower. And it's still bearish for now. Whoops. Dollar Mexican peso. I mean, this is a key example of one-way traffic. Look at that rally. And look at that reversal. We came off 7,000 pips in the dollar Mexican peso yesterday. 2066 to 1990. That was pretty unreal after yesterday's move. Unreal, right? So I would assume today any move back up towards 2020, and I thought 2020 would have held us yesterday as support. We came crashing right through that. I think that's what we wrote down yesterday. 2020, yeah, we came crashing right through that yesterday. So now support is at 1990 roughly. Remember, support and resistance is not an exact science most of the time, unless you've respected that level multiple times. It's a roundabout area. So I think 2025 on rallies will now offer some resistance. You guys often hear me say that support and resistance is not an exact science. If it was, we would be extremely the best traders on the face of the planet. And we'd all be rich. Okay.
Yeah, I like a metaphor. I forgot who told me, Blake, but that these support resistance levels are not like a block of cement. It's more like a mattress where, it'll give. It's an area that'll give instead of just stopping automatically there.
That's exactly right. It really is. It really is. Look at US dollar Norwegian krona.
I had a hard time getting off the mattress this morning.
That makes two of us. I was actually sleeping quite well last night. I did not want to get up this morning at all. I'm just getting this. I'm just working through this analysis for you guys. 855, 886. and we are in a bearish trend here. It's the US dollar, Norwegian krona. I mean, that, spike up met with sellers immediately. Dollar index, for all intents and purposes, we're still holding this, down channel. We have to get above 91.15 in order for, any of this downside pressure to be taken off. Okay, 91.15. I would write down 91.20 actually. We are still bearish here. Support 89.75, and really it's 89.50. I'm actually looking for a counter trend trade if we get down here to this
Like it.
161% extension. What's that?
I like that.
Yeah, if we get down there, matter of fact, I'm going to set up an alarm right now because
the RSI is going to be well over 30 if we do it.
yeah,
if we go
it'll
down
be
there one more
divergent
time.
as well too. I mean, we hit a new low. Okay, this last dip, which it's confirming low, which is keeping us bearish. But a next move will probably be divergent. So
Especially on shorter TFs.
Yeah,
like
yeah.
4
I'd be
hour.
willing to,
Yeah.
be long
Yeah,
down
like
there. No,
that.
I don't think
No.
we're getting down there today.
Yeah. Next year.
Yeah, probably next year. 89.75 is support. Dollar yen. Dollar yen sucks still. 103. And I mean 103.90. You guys have fun with that. I leave it for you guys to trade because I really have no desire to trade the dollar yen right now. None. That's I don't even want to put it in a bearish trend. It's just range bound. Okay, let's really quick before we go over to gold and the S&P. I want to comment really quick because I did mention it on Bitcoin. Bitcoin, just so you guys know, we've had a really, we're starting to struggle here at the big 127% extension. That's the 127% extension of the last 3-year consolidation. So that is the highs from 2017 to the lows of 2018, 127% extension. I do expect that to continue to offer resistance, at least, maybe for the next couple weeks. But any dip now down to 20,000, you just have to be a buyer down there. I mean, because this is a breakout. So
that's what it measures, and it was a 3 drive on shorter TFs. I showed it yesterday, so
okay,
pretty close. See that 1, 2, 3 in the box? Yeah.
Up here.
Oh, yeah.
1, 2, and then the third one.
Yeah,
got it. If you guys trade cryptocurrency, you just hope that we get a dip down to 20,000 and maybe get long down there with a stop below 19, right? I mean, because then if you break below 19, then we're going to have a much more severe pullback than what you would think. So, but that's the way I'd play it. I'm just putting that out there. Let's talk about gold. Gold, I'm surprised that gold hasn't capitalized on yesterday's move. So that does make me a little nervous about a couple of things. First of all, it makes me a little nervous trying to chase dollar weakness when gold's not following suit. I'm going to write down 1900, and then support's going to be at 1850. But I'm just saying that gold should be higher right now, and it's not. And that does make me a little nervous. So I'm also going to keep it in range here because we can't sustain the rally, above this previous, head and shoulder formation. Can't even hold above that, which was 1875, if you guys don't recall from last week. Okay, last but not least, S&Ps. Now look where the S&Ps went yesterday. 3,600. almost 3,600, but you can see that is the breakout point, 35.90, right? So I think is what we wrote down yesterday, 35.90. Whoops, as long as we're above 35.90, you have to remain bullish. I think we went to what, 36.05 yesterday. I mean, whoops, I did not mean to do that. We went to 36.05 or roughly that yesterday. And I mean, that held. You know, today you might get a dip down to 36.70, but and then you guys know, whoops, I didn't mean to do that. Key resistance is 37.30. Right, that's the 127% extension right here. Okay. And we could overshoot it just a little bit just to stay within this wedge. You know, we could get maybe to 40, but I would say that's resistance right there. So I'm going to leave that for Steve and Stelios. Sorry, guys, didn't mean to run into your time a little bit, but Dale, he had a few things he wanted to say this morning. So Dale talked his butt off today.
Yeah, sorry, guys.
No, it's
Inexcusable.
Yeah.
You're both
I'm
fired.
sorry to be yawning right now. But Steve, Stelios, I want to say it's all yours. And then guys and gals, somebody asked me yesterday about, or not me, asked the Forex Analytics, Twitter account, and I saw the response, and I just wanted to say something about that really quick. Pepperstone Securities is our webinar sponsor right now. Okay, and if you want to take advantage of our relationship and want to be able to get Forex Analytics for free for a couple of months, you have to use this link right here. The question was, does it matter what size account? I don't think it matters on the size of account as long as you meet the live account requirements from them. But what does matter is you have to trade 5 standard lots over the course of some time, right, Steve? Over the course of like 2 months or something like that?
I don't think there is a limit of time. First of all, there is no restriction as long as you meet the minimum requirements of a deposit, which I think is rather low. It doesn't really matter other than that. And you get 2 months once you do that, no conditions, unconditionally. And then whenever you you manage to do in total 5 lots, you get another 2 months. I don't think there is a time restriction. But obviously, if you do that within the first 2 months that is free, you get the 4 months of free access to Forex Analytics being consecutive, which I'm pretty sure that 5 lots of trading within 2 months, even a small account, will do.
Yeah. So anyway, just wanted to mention that, and I hope that you guys take advantage of that offer with Pepperstone. They're one of the bigger FX brokers in the world, and obviously you have to be outside the US or Canada. This is going to be for more of the European and Asian traders out there. So guys, thank you very much for your support all the time. For those of you that are part of the Forex Analytics family, Steve, Stelios, I'm going to pass it over to you, and Dale, obviously. So you guys have a great one. I'm going to step out for a minute. I'll see the rest of you on the daily roundup webinar 4 hours from now for those of you that are Forex Analytics subscribers. So thanks, everybody.
See you, Blake.
Thank you, Blake.
Thank you, Blake. So, hello,
Guys.
everybody.
Tell Dale.
Hey guys, I just thought what you could do is you set up your Pepperstone account and you do a 5 lot, you buy it and you sell it immediately, and all you do is lose the spread, and you get 4 months of
Yeah, I
Forex
didn't want to exactly say that because it's a little bit abusing, the goodwill of Pepperstone.
Hey, this is the way of the world.
But
Find a way to
Yes,
exploit
I-
everything.
Dale
I
will
guess
find
I guess what you said will work just fine.
Dale will find an arbitrage opportunity everywhere.
Yes, selling
Yes.
cats, buying dogs.
So yeah, so it's been relatively quiet day. We're heading up to Christmas, and usually this period is quiet. Although you can get moves which are which don't follow logic. Let's say I remember when I was trading for the bank, I was always working during the last 10 days of the year because there were opportunities.
Yeah.
And so you can always expect something. But anyway, it's been relatively quiet. We had a few pieces of news, let's say. So the first one is that the US voted the stimulus package, and stimulus checks of $600 will be sent out. Everybody rejoice, go and buy Tesla or something. And so that was very, very expected. I mean, we knew that already. On the UK side, there was an effort, apparently, from the UK side to find a solution in the fishing issue. I think, if I recall correctly, the Boris Johnson proposed a 60% reduction in European fishing, and the Europeans are saying, no, we want the 25% reduction. And frankly, the more I read about this, the more I see, look, it's still negotiation. It's like I said weeks or months ago, it's like a divorce. They're trying to split the stuff, because if if they don't accept a 60% or 50% or 40% reduction, then they get 100% reduction. So that's it's an interesting game of chicken that they're playing. And but the bottom line is that the Europeans denied that, refused that suggestion, and they continue. So there you go. More of that happening from 1 hour to the next. Otherwise, we had some data today. We saw the US data. Who cares? UK GDP better than expected, but again, who cares? Retail sales in Australia, actually, that was a big beat. Markets didn't actually care, weirdly. At some point, one of our friends is asking, when will markets start caring about data? Eventually they will, but not at the moment. And in terms of market movement, I mean, really, what's been today, it's been quiet. Metals have been moving a little bit. And I was looking at the weekly candle for silver. It's like big doji, big wicks. It has to make a decision. But anyway, I'm still watching that. But otherwise, nothing more to report.
Yeah, yesterday was, a nice reminder of what we've been saying again and again and again, that you shouldn't be trading on intraday price action when you're looking for reversals, right? So if whenever I was talking about a possible reversal yesterday, I kept repeating again and again, like, if this happens by the end of the day, and if this happens by the end of the day, and it is more than clear that, for example, if we go to risk, the S&P didn't break down from this wedge. We anyhow were seeing the divergence. Nasdaq never did, even intraday. The DAX never did, even intraday. And the S&P was doing so intraday, and look at the daily candle we left behind. I mean, we pared back like 3/4 of the losses, and we closed, relatively unscathed, having to do with the technical picture. So a lot of people
Steve,
were
you're a candlestick expert. Is that a hanging man? Yesterday's
yes, it is a
daily?
hanging man. It
so
is a
that's
hanging man.
really, even though it came back, bearish. Hanging mans?
Pin bars can be reversal candlesticks, yes.
Okay.
But they're mainly indecision candles. So in
Okay.
order for you to take a pin bar and say that this is a reversal, you need to have more evidence. You know
Like
what
taking
I mean?
out yesterday's low.
Yes, exactly.
Obviously. Okay.
Yes. So
Thank you, buddy.
So, I wouldn't be trading just based on that. You know what I mean?
Yeah.
Especially during the, thin liquidity that we have on holidays, and especially knowing that the seasonality having to do with Santa Claus week is, very, very positive. I mean, we haven't really had in years like a negative December. And whenever we did have negative Decembers, they were like, slightly negative. So, no matter how you look at it, shorting just because you had some intraday volatility, I think is, it's rather dangerous. Now, there is, the flip side of that being, okay, how many handles away are we from the, highs? I mean, just few. So I, I'm not going to say that I find it illogical that somebody, you know, would want to say, okay, we've retraced a big part of yesterday's losses. Why don't I take a stab? Why don't I give it a shot? Like I short here, I place my stop loss above the highs, and look for at least one more leg lower. From a risk reward perspective, it makes sense, and you're not risking that much. So I'm not saying that I consider that to be a foolish strategy. I'm saying that if you're looking in building some type of a thesis that that's it, we found the high, we've topped, we're reversing lower. That's quite dangerous. Now, taking a short-term trade, as I said, is a different discussion, and I really have no objection to that. To be honest, I even considered it a few times if I wanted to short here, just before the webinar, and put a stop above the highs, which is like 40 handles, and look for at least like a retest of yesterday's lows. I mean, the risk reward is roughly 2-to-1, which is, fine. But as I said, what depends on what makes you tick. Having to do with gold and silver, very volatile days yesterday, undeniably. But at the end of the day, I mean, what was left behind was, indecision candles with big ranges. But all in all, like, nothing has really technically changed. Silver still remains above the broken channels trend line resistance.
It's
Go
interesting, Steve, the gold silver ratio, without silver making new highs, it is making a new low or testing the low of the move now.
Yeah, we haven't actually visited this for quite some time, but as you see, it's following nicely this channel that we were monitoring, right?
Yeah.
So it's following this quite nicely. It's still depreciating in this occasion in an orderly manner, because previous to that, it was depreciating in a really not orderly manner, right? I mean, it was just diving lower with, absolutely. But, as you see here on the chart, probably you should start being a little bit careful here. I mean, we tested this channel support yesterday once again, and we seem to have stalled. So, I think the time to be short the gold silver ratio was here. When we were consolidating the first move lower, it was here. When we were considering consolidating the second leg lower, it was here. When we were consolidating the third leg lower. But, as we speak, it's not a slam dunk, opportunity as it was. What is an interesting opportunity is probably to buy natural gas now that it's breaking out. I have to say that. So this is, one of the charts I'm monitoring, and it's making the move now. So that is something we need to mention. Crude oil, exactly as it happened in the case of the S&P, and let's pull it up on the 4-hour chart. Crude oil, is still holding, right? You want to look at it like this, like a channel like this. You want to build it as a wedge. In any case, it's still holding. So, quite an interesting day yesterday, volatile, down day, and all that. But technically speaking, crude hasn't broken down yet. I would definitely be careful. I mean, at some point we need to see a correction here as well. There's no question about it. I mean,
what would be a target for you, Steve, if it broke down?
Well, we mentioned that yesterday, 42. 42, yeah.
Okay. Yeah. Okay.
42
Yeah,
would
I
be my
see.
first downside target. And we might as well see it. I mean, this here might be a little bit of like a consolidation, right?
Yeah.
And we
Or we
might
could
get
still have a C.
yeah, yeah. So, I'm not saying, I'm not objecting to somebody that wants to short it here. I mean, yeah, it can actually happen. I'm just saying that we still haven't broken down yet. So, you need to be careful. I mean, having, um, you know, um, having the certainty that, that's it. Indices have turned lower. Crude oil has turned lower. I don't think you have enough evidence for that yet. Yesterday was a day that registered, but it wasn't a day that actually broke things down. You know what I mean? So I think we need to be a little bit more careful. And as I've said many times, I'd rather see on a daily closing basis something that actually registers as a technical development. And for the time being, we've had a sniff of that yesterday, but nothing conclusive yet. In any case, I think it's interview time, and we have Tracy, right?
You'll never know. All right. Yeah.
Okay, good.
Tracy is here. Yes.
Okay,
So, all right.
Pre-Christmas, so it's a good opportunity to wish her Merry
okay.
Christmas.
It is.
And let us know. I mean, it's good if we find out, fundamentally speaking,
About crude.
yeah, what's happening here with crude. I mean, we're seeing
Okay.
some technical momentum loss and some potential
Happy holidays, Tracy.
weakness, but let's see what she thinks about it.
Hello?
Hi, Tracy. Happy holidays.
Hi, you guys. How's my favorite crude?
We're
Good.
okay. We're
How have you
better
been?
now that you're here.
Excellent.
Okay, so we'll do the usual, Trace, where I'll
so
share my screen.
right. We'll just share your screen.
Okay, so we've been talking about energy. First of all, I want to congratulate you on your flip to the long side of oil. Took a lot of people by surprise, not you. And the oil shares were really played a lot of catch up in the last quarter. One of the most hated groups in the market, and it ended up being the star, I believe, in November, along with banks. So, what are you thinking here? We had that huge day yesterday with a little, 3 drive to a top formation over here that I saw.
Yeah.
Go ahead.
Yeah, I mean, yesterday was kind of it was kind of a combination of a lot of things. First, it was futures expiry yesterday.
Okay.
So you had a lot of last minute roll, and then of course we had the UK tier 4, right?
Yeah.
And then we had all the airline or all those countries say that they didn't that they were
fly.
suspending flights.
Yeah.
Right.
Yeah.
And then you also had the CDC who said they launched an investigation into those 6 people that had anaphylaxis over the COVID shot. So there was and then we had the stimulus bill that still hadn't passed yet that was $600. So,
Yeah.
it was
I know.
kind of like,
I know that I'm going to retire now.
right.
I want to ask you.
$600 in leveraged futures, and you'll be okay.
Yeah, I was going
Don't
to
spend
bring
it
it
all
up.
in one place, Dale.
And
Don't spend it
Steve,
all in one place.
stay here because I was going to bring this up during the session. So part of the stimulus bill, and I think it was left in, was something that limited the Fed's ability for a lending facility. I think that ended up in the bill. Do you guys know? Steve, do you know, or Tracy?
I'm going to assume that it did, but I don't
Okay,
know.
Yeah,
well,
I think so they let some of the lending facilities expire, but that doesn't really tell me anything because they've proved that they can create, extend, open up facilities at the blink of an eye. You know what I mean?
Well, this is the first time, though, you've seen any kind of legislation trying to limit the power of the Fed. Okay, I mean,
limit
why are
the
you
power
laughing?
of the Fed. I'm laughing, Dale, because last week last week, I'm talking about a single week, M2 money supply expanded by $250 billion.
The numbers are so obscene now, right now.
Yeah,
Yeah.
we're talking about a week,
Which is insane.
right?
Wow. Okay. Well, I'm just, there are a lot of people that, don't really care for the Fed. In fact, one of your fans, Harold Malcolm, Tracy, I was talking to him yesterday. He brought you up out of the blue. Do you know her? She's fantastic. You have fans everywhere. And he said that, what Paul has been doing and talking about, really, he's not real happy about what the Fed has done. I think there is going to be a movement to limit the power of the Fed. Maybe that's,
How exactly are they going to do that? Do you know how much of the US debt expires within the next 12 months, Dale? Just give me a number.
a trillion.
$7 trillion. Who's going to buy that?
Well, I can't do it with my stimulus check. So
Just put that number in context. $7 trillion of US debt expire within the next 12 months. And if I'm not mistaken, 1 trillion of that expires within the next month.
wow.
Who's going to buy? Who's going to absorb all that?
They're just going to have to roll it over.
Yeah.
What they have to do.
Yeah, there was a movie called Rollover. Do you remember that, Tracy? I think Chris Christopherson was in it, and that was a big thing that they couldn't roll over the debt, and financial Armageddon happened, and it made rates spike because people were
not even in
up for
Hollywood
fun.
they could imagine what would be happening in the beginning of the next millennia, right?
Yeah. So anyway, so Trace, with this kind of
Harold is
backdrop,
wonderful. So
huh?
Harold is wonderful.
Yeah.
Very nice of him to bring him.
I mean, what a lot of wisdom. When I look
Incredible.
at what he's done with his life, I couldn't list all of the things and presidents and committees and work that he has done in a 30-minute interview. And he said that he has more satisfaction working in the public sector than the government sector. So let's go back to this COVID. Let's say that there is going to be some impact from what's happening with countries closing down. What range or where's the floor? Technically, Steve thinks around 42. Do you think that's viable?
I mean,
That
I think
crude
that well, first of all, I think this market was a little bit stretched and we kind of needed that pullback, right?
Mhm.
So, for me, this is a good thing, but I'm still not looking to shorten this market. I will still be a buyer on dips. So I think between 42, 44 and 45 for a
Okay.
pullback.
Okay.
Would not be out of the question. I don't know if it will get there, but definitely, I think that a little bit of air out of this market is not a bad thing.
It'd be healthy. And how have those shares performed? You were talking about you wanted to have some exposure to the oil industry in Africa. I think it was Ghana.
We were talking about that at the Trader Summit, and I believe right after that, Dalek, which was one of the companies that I had mentioned, that's East Med Gas. I think it jumped like 100 points.
Wow.
In the month after, just right after that, we talked about it. So,
Nice.
I did give a few companies that I really like, and I still,
Congratulations.
I still like those. I'm still.
What's a symbol of that, Tracy, so I could
over
give people a visual of it?
It's on the Tel Aviv Stock Exchange.
Okay.
And I think I just looked the company up there, like
I just want to say shalom to it. Okay, so do you know the symbol?
No, I don't off the top
Okay.
of my head right now.
Okay.
DEL,
All right. Okay, so continue. Okay, so floor around here.
So I think, 44 between 45 and 44. We're coming also seasonally, even though seasonality is somewhat skewed because of everything that's going on, but we're still seasonally like into the end of December. December 31st is tax assessment for oil companies and what they have on stock. So generally, we do see an uptick at the end of December because they're just trying to get rid of barrels, right? So we
Right.
start seeing big draws.
Right.
So crude price picks up, generally speaking, because they don't want to be taxed on, obviously, everything.
Okay.
So that's just something to keep in mind.
Okay.
And then, usually we see kind of that peak in January, then we kind of see it back off a little bit. And then February, mid-February and February, then we start seeing a bounce again into the spring when demand picks up. So that's the general outline of, say, the seasonality charts. Now, things are different, obviously, because of all these lockdowns and all of COVID and things like that. But we still have maintained the general, aside from April, we still have maintained the general seasonality trend, believe it or not, this whole year.
Okay. All right. So still constructive going into 2021. I want to get your view, and I know you were more specifically watching Euro. This is one of the most crowded trades on the board, the bearishness in the dollar.
Yes.
Any comments on, people being on one side of the boat? I've asked people what could be the narrative. I asked Harold yesterday, all the narratives are bearish. Fed printing, you just heard Steve, talk about the balance sheet and what's happening on the fiscal side, all of it on the surface, and obviously looks like it's completely bearish a dollar. Do you have any narrative that you could think of that could be positive for the dollar besides potentially risk off in equities?
Yeah, I mean, I think that what we need to be looking at, and I tweeted something out today, EU banks that are very susceptible right now to loan loss, right? They don't have enough loan loss provision. So if you start seeing bad things happen in the EU banks, that's not going to fare well for the euro, right?
Okay,
And
yeah. So that's like bringing back a story from a long time ago that's gone uncovered, or at least not paid attention to, that perhaps there could be some solvency issues with maybe Italian banks or
exactly
Spanish.
with
Okay.
actually all EU banks. They said there was a survey of 127 banks and none of them were properly funded.
Maybe that's is that why we might be having a flow into U.S. banks, because they took the loan loss provisions and they're in better shape?
Yeah, they're definitely in better shape and have been in better shape. And I think
Okay.
we're seeing we've seen an extra flow this week because they've allowed buybacks back, right? And
Right,
JPM and I think who is it? JPM and somebody else came out right away and said they were doing 30 million worth of buyback. So that's kind of given the financial sector a little bit of boost this week just on the surface.
okay.
Another dollar bullish narrative would be, and I don't know if I completely buy into it, but the other narrative that is sort of flowing around is that Yellen will be bullish for the dollar. As
In what way?
Terry. Yeah, I know, believe it or not, but that's the
Yeah.
narrative. But that isn't.
You mean just jawboning it, or are there things that
that
you could
she
do?
wants she wants to push the stronger dollar narrative. Now that remains to be seen, but that's what some of these banks are floating right now.
Interesting. Yeah, I wonder what kind of technical operations the Treasury, besides intervention.
Well, they could stop swap lines and things like that, and if that starts to happen, that definitely will give the dollar a boost.
Okay. I think that also helps us in any kind of economic battle with China, that I've read that actually a stronger dollar, most people think a weaker dollar is our advantage and China's disadvantage, but I've read that it's actually the opposite. So you pay attention to all the currencies. You have any levels that you might be interested in maybe putting on some short positions in euro?
I mean, really, that would be dollar dependent. I mean, right now it looks overbought, but you
Yeah.
can always get more overbought.
Yeah. I've been there. Yeah.
But I would say, if that, what was the high back in 2018?
You mean 140 or 125? Here's
That
18.
125, right? So
Yeah,
I think
run
to
20.
get up to around that 120, if right now it kind of looks like it's at resistance, but should
Okay.
it go up into kind of that high volume area back from
Yeah.
2015,
Okay.
124, 125, but we're really, I mean, it's getting overcooked here.
Okay. I know that you're also a trader and follower of the shiny stuff. Any view on, what's happened with gold? We recently, held this weekly 50 and rallied back. Yesterday, gold really didn't recover as much of its losses as, say, the euro did or the S&P. View on gold still constructive?
I mean, I'm still constructive on it, but as I think we talked about last time, I thought that we kind of had hit the peak for the year at, at
2070.
yeah, and that we were kind of going to consolidate for the rest of the year, and that's kind of exactly what we have been doing. So, at the fact that gold should be more bullish, it should have reacted more bullishly yesterday with everything that was going on. So that kind of leads me to think that we're just still in this kind of consolidation period right now.
Do you think Bitcoin is siphoning some flow from gold?
I mean, that's what people are saying, and I mean, quite possibly. But the thing is that I don't, I think
I don't
that
understand
that
Bitcoin.
fund managers that are, that are long gold, probably, already have their, 5% or whatever as part of their portfolio. They don't really trade it, right? They just hang on to it. Whereas Bitcoin is just seeing a big influx of capital from funds all of a sudden, as well as retail space and things like that. So I don't think it's necessarily money coming out of gold. I think managers are still holding their gold positions as they do for a hedge. It's just that they're not trading it so much.
You get any changes in any of the markets that you foresee with the new administration coming into the U.S.?
Yeah,
I
think with the new administration, coming in, we just had Pete Buttigieg. He was the nominee for Secretary of Transportation. When he accepted that nomination last week, he did re-emphasize that, that we're going to build America back better, right? So that we're going to push a lot of infrastructure projects. So that is very material and energy intensive kind of projects. So looking into the future, into the next administration, if these sort of projects get pushed through, that's going to be very bullish for the energy sector and very bullish for the materials sector.
So industrial cyclicals, that type of, it's not as much reopening as it is infrastructure type of trade,
like
right?
they were talking about his infrastructure project includes building new roads, fixing bridges, things like that. So all your materials and whatnot would be very bullish at that point if these projects actually get off the ground.
Anything else on the radar for you, Trace, that you want to talk about?
No, don't forget, I'm at Hedge Fund Telemetry. So, love for anybody to take a trial. I do materials and energy.
There you are.
There I am. I do materials and energy, as well as some broad strokes in my weekly reports. There's a trial you can sign up for. We do daily sentiment, DSI index. So I would love everybody to at least try it out.
give it a shot. I only have Tracy on here every few months, and we'll get back together again in March. So at this time, Tracy, I want to wish you and your family happy holidays. I hope you guys remain untouched by the invisible enemy, and that all your trades turn gold in 2021. Appreciate your input and contribution to what we've done here at Forex Analytics over the years. And you're my trading warrior sister, and I'm always rooting for you.
Well, thank you very much, and happy holidays and Merry Christmas and Happy New Year to all you guys over there. I think you guys are all great, and to everybody listening today, thank you for listening.
Yeah.
To me.
So
And,
So
happy holidays.
here's Tracy's website and hedgefundtelemetry.com, and you could follow her on Twitter at Shy GRL, not GIRL, which I thought it was at the beginning years ago. And thank you, Tracy, and you're really a talented market tactician and forecaster, and we appreciate you bringing your ideas for free to us here at Face. Thank you, my trading warrior sister.
Thank you.
All right, adios.
Great day, everybody.
Happy New Year, everyone. Okay, that's a wrap, and we'll see everyone tomorrow, and that'll be the week. So good hunting, everyone. The rest of the day, go see Blake and chat, and don't forget, don't just count your barrels of oil, your bars of bullion, your stock certificates. Count your blessings. And we'll see everyone tomorrow to wrap up the week. Adios.